Thanks for having me. So this is what happens before you go to AI and investment, and then after you take the AI and investment, you lose your hair, and and then. So yeah, so thanks for joining me. For next 15 minutes or so, I'm just giving you some like little bit of picture around where we are, where you stand in terms of research and investment, and then I will have 5 minutes of Q&A if that happens. So I'll just start by talking about a very fantastic paper that was published, which we call "Attention is All We Need." Right? This is a paper about the transformer model. So Google and the team from the Google, they had a new way of modeling around understanding with a positional encoder. So I don't want to go into technical. I don't want to make this a technical. But what happens was all the large language models that you see today is trained on these models, everything, including ChatGPT, Llama or Mistral or things like that. And since this model came in, what we call self-supervised, so when you plug in large number of text and large number of images, it's try to learn the context out of it. And so ChatGPT, once this paper was published, quickly, OpenAI realized that if you can have a version of internet that we can take all the text and we can have complete images out of it, we should be able to self-understand a bit of version of internet, which is what we see today, ChatGPT. ChatGPT became so popular that within 5 days you have like million of users, and within 2 months you got like hundreds of millions of users, and we rest is the history. Now, last 2 years, most of the papers that you see published around the transformers on archive. So pretty interesting world that we live in. It is so interesting that 2021, Stanford researchers and computer scientists call this model as a foundational model. And you might have heard the foundational model because this becomes a foundation for AI going forward. So this becomes an evolution. This is a starting point for all of us to look into. Now, where do we stand when it comes to investment and using this great area of AI and how that can be applied on investment? And we don't have any doubt that this foundational model, where we stand, has a transformative effect because of self-supervised way in which we live. So one of the key areas that we have, and quite often you will see iceberg, and this is like a bit of a cliche, but that works very well. So you have seen that 20% of all the data that you see, and you can go in how much data storage there is. 20% of all the data you have is only 20% is structured data, which is in tabular format, and 80% of that is unstructured. So images, text, these are not structured, audio files, videos, and so on. The worst part of this ratio is that it's exponential growth of unstructured data. So as we speak, we are taking pictures, as we speak, we are taking like audios and videos and so on. That percentages keep on growing, and the percentage of structured data where traditionally we get the value from the financial industry, which is mostly a tabular format, or if you look at the newspaper, you can see different ratios. These are all comes under that 20% that we talk about. How do we extract the value out of the remaining 80% is where the AI comes in. That's where a lot of hedge funds, investment management, trying their best to really find out the signals. And also the themes are changing. So people are talking about sustainability as a theme. People are talking about social media as an influence for a lot of stuff that we sell and buy, and how do we position ourselves for future? How does the community respond to a lot of areas like COVID happens, and which company actually becomes more popular matters nowadays in the financial market, which is all coming from the unstructured data. So one of the ways, there are a few areas where we are applying, and we believe there will be a transformation, news flow. So I just give you an example here, what we found out. 1,300 plus articles just about the Coca-Cola, and it's not a one name, but on average, every large cap that you will see will have hundreds of news. In fact, we are receiving more than 1.6 million news year to date so far. It's even more than that. How to process the news, and then most important, how do we process the news and say these are relevant and these are not relevant for us? It becomes a challenge, and this is where we believe that when you have this generative AI, which kind of look into that can learn and self-learn, and then they can generate the context out of it, is going to be much more of a game changer. This is where we believe that next 5 years down the line, you don't have to even look at the news. It will summarize everything. It will tell you which of the news are significant, which of the news which is not significant. And 5 year may be the overstatement. It can be even 2 years down the line where we see some data source or someone who is giving those services, maybe through the vendors or through some innovative startups and so on. So there are the second ways in which we believe that we can be very much generative analytical AI-driven research. So areas like earnings calls transcript, management disclosures, press release, these are the areas that pretty much more concentrated on the financial impacts and the risk, and we still do not have a ways to process it. For example, how do we know that margins for the companies are reducing, or how do we know that companies are talking positive about certain areas? Where, China slowing down, how do we know that which companies are well positioned? These are all the areas that comes out again from the 80%, that chart that I saw you, where you can derive a lot more context that we currently do not have. So you can look at the history, but when it comes to looking at some of this expectation and estimates, this is where we believe that will be a game changer. So I give you examples. We have over 2,500 names that we hold, and then over 3,500 if we include the quantitative systematic strategies just in one asset class. And then if you look at the earnings calls transcript for all of them, it's once every quarter, you will find over 1 million pages of document where you need to read, and as an investor, you need to read and analyze them and say whether or not management says something makes complete sense, or what they're saying, what the questions that's been asked by analysts and was response to it. So quite often management are positive about their own presentation, but when they ask questions and difficult questions, they are giving a lot of negative sentiments, which becomes a kind of dispersion that is very crucial. And before generative AI, probably it becomes very difficult for any investor or anyone to read through all those millions of documents. So timeliness is a big thing. So you can see that everything can be processed and everything will be available in the real time versus you have to read one by one. It takes time. So very interesting. Someone asked me this question: do we lose some value or information when we summarize something? So it's a very, if I have a 40 page of document, and if I summarize to 1 page of document, do I lose some information that someone, when it's read through that 40 page document, will gain from it? Is there some differences? And this is a research that is done by University of Chicago, both, which is my alma mater, where they have went through last 15 years of all the earnings calls transcript releases and all, and they found out that there's hardly any information loss. They have gone through a very rigorous, this is an academic paper, anyone can read. The paper is called Bloated Disclosure: Can ChatGPT Help Investor Process Financial Information? So we are working closely with some of these professors. We found out that there is no information loss. In fact, how much of noise there is. If there is no information loss, then there must be some noise that we are kind of reducing through the summarizing and through this summarizing text and extracting some generative text out of it. And that turns out to be close to 70%. So 70% of all the document that you see on average, and not one number, is a bit of a noise that has been some sort of duplication, something that doesn't make sense, something that has been just trying to, beating around the bush. And then remaining 30% is where the actual contents are, which is where generative AI or version of generative AI will be, some form of AI will be able to provide you. Now, is there a large language model going to help us, or can we do better? And this is where we do a lot of research at Allianz. We try to fine-tune some of the models, and in fact, we are looking at some of the foundation model that I just spoke, but then we also look at, can we do better? And of course, we can do better if you can have a large human feedback. So you can have a reinforcement learning where you can have a human feedback, and then you can try to mimic that. And we found that if you have large enough sample, and if, let's say, analyst or someone, intern who is working on it, and if you have large enough sample of intern, and I hope no interns in the room, they quite often do the typo and they don't know a lot of acronyms and things like that. And so if we train enough on the interns, we will be able to produce that kind of outcome. But this is where very interesting that you have a reinforcement learning, where can you train on a really the brilliant analyst, where can they mimic that brilliant analyst? So two extreme examples, and this is where we can advance our large language models to fine-tune that just for the financial documents. Now, what does that mean for a generic task? It will be doing poorer in other contexts, but of course better in some contexts, which is another paper that someone wrote about it. How do we apply? So I'm just trying to talk about the listed asset class, and I'll give you some examples on private asset class, which is also the area that I'm concerned with. So essentially, there are many areas where you can apply the AI models or machine learnings, like for example, summarizing text or sustainability related events, which is very crucial. You're seeing that whichever the companies are actually trying to reduce their carbon exposure efforts to that, and investors have certain fiduciary duty to some of the funds where this is a sustainability related, so they want to be ahead of the game by choosing the companies that are doing better. You can have the analyst consensus, broker reports, and so on. So many ways where you can apply the traditional AI models, but also you can apply generative AI now much easier because of the self-supervised learning. Some cases of the private market, very interesting. Until now, if some of you are working in the private market, you know that is the area where not known for very advanced AI, unless you live around some of the top leading firms. We are seeing that because it's so easy nowadays to kind of find out the model, fine tune, and get better at it, we are starting to see how we can make the private market more AI. How can we find a better deals? How can we have a liquidity planning or market transparency, better risk management, better understanding of the valuation? So quite a number of areas where we believe that generative AI can help us. But also comes with a potential risk. Of course, cost, finding a talent, security, there's a legal implications, and also adaptation of the different investors is a learning curve that everyone has to go through. Now, the last two slides, where I'll just take 1 minute on that. So we are just talking about, fine, I have a model. How can we impact bigger? And so this is where we believe that automation of the model is quite crucial and critical. And one thing that we certainly need is to impact the model at the scale is where we get the best value out of it. So if I have a news that I just sold for one company, is it possible that I can just automate it, use them? Nowadays, the people are working on ML ops or use on some sort of model where things are more automated. You get your news and signals and everything derived in almost real time. It looks at the previous 3 months signals and look at all the sort of analytics that is generated in real time in more automated way. That's where you kind of start to looking at the real value and value drivers. So automation and AI, I think there's a two parallel thing that will merge to create the best value out of it. And last thing, this is my firm belief, is if you look at any investment process, you'll find that you have idea generation, you have a sustainability research, portfolio construction. These are if you have a disciplined investment process, all this process is going to be very much some form of AI will be applied. Now, someone asked me, and I leave that with the last question. Someone asked me this question: what will be the co-pilot for investment will look like? And probably this is a burning question that next 1 or 2 years the investor has to look into. Probably that will be somewhat aided by AI or some form of generative AI. So I open that question for the question. If there are any questions or anything that anyone wants to ask. Sure, yeah.
I realise a lot of these things are things that are maybe coming up, but what have you implemented so far and what made the biggest difference?
So we have implemented a couple of things. One on the news. So we look and monitor the news, classify based on every companies, and we try to find out, okay, what are the news that I'm receiving daily? What kind of news that is? What is it related to the events? We have this topic modeling on the top of it, summarizing, and then we look at the sentiments and look at the, whether or not this signal will persist for how long. So there's a decaying signal on the top of it. So if some news are last week news, how does this combine with this news today's? And then we just try to combine on that. There is some version on the news. And the second one that we have worked very recently is the earning call transcript, which is even more interesting. So earnings call transcript, in the past, we worked on our model. The current version is really giving us a lot better efficacies when it comes to, we apply Llama, we apply ChatGPT, so OpenAI model, and Mistral, so 3 models that we have tested, very similar kind of accuracy if you look, different pricing models. But when we apply on the earnings call transcript, we find to be much better. And so it keeps us on edge because it gives us, and it's integrated to our current workflow. So every morning, like every quarter, like let's say there are some releases, we will get the data from the FactSet and other vendors, and then we just plug it into all this. So instead of reading 40 pages, we will look at through that, and then we also have a summarization around topics. So I can summarize around margin, and I can see, okay, what is this person talking about the margin, what this person has talked about margin the last quarter, and so on, and then whether the margin increasing or decreasing. So these 2 things that we have worked on very extensively. The other things we are working on, which is not anyway we are trialing, is mainly on the report generation. So we want to draft a report, 100 certain reports that we generate. So can we have a better draft, and then humans can look into, and then we can release that. So yeah, 3 areas. Yep.
First of all, thank you for a very interesting presentation so far. I'm Alex from Fintre. I was just wondering, as far as I could tell, I didn't catch anything about uncertainty estimation or probability calibration from the predictions of the models that you're using. So how do you ensure that the information that you generate from your models actually is to a high degree certain in terms of accuracy?
Yeah, very good question, Alex. So yesterday, it's a very timely question, because yesterday Princeton computer science department, they released a paper. They say large language models are easy, but benchmarking them is even harder. So if your question is around how do we validate whether they're right or so, what we are doing now is we are actually getting a lot of portfolio managers, investors, analysts, and getting the human feedback around it. So it's really like thumbs up or thumbs down, how do you do different? So this is where you might have seen reinforcement learning. And then we are trying to see accuracy based on that as a benchmark, which is much easier. So we understand our benchmark and try to understand that. In order for me to gauge whether or not what weights of these models can be and how that can be changed, that's even harder. So we are not there. We can't do that. We are not in a computer science business. Yeah, just to answer your question. Sorry, we have a question.
Hi, it was kind of related to that last point, but I wondered if once you got into that human feedback loop, if you were then applying a quality rating on the source of the news, so that you went back to certain sources more and you held more value in that particular news outlet than others?
Very good question. So I think there's a different answer to the question. If you look at this model, there's a vendor called StarMine. They do the very similar thing. So what they do is they really weight the analysts whose predictions are more often right than wrong. Well, we can do that as well, but we try to be more unbiased as possible at this point in time, but we can explore that as well. Yeah, that's a good suggestion. Yeah, we haven't done that on that part. Do we weight certain news source versus some other news source? We can think about that. I think some gentleman has a question there. Yeah.
In fact, it was more or less the same question I had, but just to complement that question from the gentleman behind me, if you look at the analysis for that of the particular portfolio research analyst or the manager over a period of 6, 12, 18, 24 months, you're better off comparing the benchmark as opposed to 3 or 6 months, which may go in the right direction because of the market conditions or the assumptions made for the underlying large language model calculation. What's your thought process on that? How do you make it more sustainable?
Yeah, I think, again, I think there's a human is going to be very central to the whole process. So I don't want to say it's very early to say, okay, now we have large language model, we don't need analysts, right? That's never going to happen, at least next 10 years, I believe. And again, we will continue to provide as much information to, that's why we talk about the investment process, because when you look at the research and the idea generation, we large language models that essentially provide you the data point. So it's more like we get a structured data, which is in tabular format, and here's unstructured data, which is converted into structured data for me to make sense and better gauge of the decisions. So again, it's more like a decision support system at this point in time. Whether or not I make that decision support system as better than something else that I have, we are not in a better judge as yet, but we certainly find a lot of value, because one thing I haven't touched here, but market efficiency has changing quite rapidly. So we might have seen that computer, someone who is, someone who has been trading in 1990s, they would have seen they can look. You generally look at the Financial Times and you can do the tradings there. But if you look at the Financial Times now, the prices are already reflected because there's a high frequency trading and there's a lot of market reactions to a lot of news coming in. So you are not getting a lot of advantage in a way, but that's why you need these sources for you to make a long-term investor much more aware about those signals. So yeah, you're right. I think we will have to see how it goes into next 1 to 2 years. But for preliminarily, we definitely see a lot more value. Yeah.
Okay, thank you.
Yeah. Thank you very much.